Hi, and welcome to another of my videos. Today I thought we'll be talking about how long it actually takes for your startup to start making a profit, to actually start generating cash for yourself and for the other people that are connected to it. And basically, I had this idea from an article that I just read that actually Sterling Bank, and for you that don't know, Sterling Bank is a neobank, and they started operating about 5 years ago. And finally, after 5 years of hard work, they managed to become a profitable company. That also reminded me about TransferWise, which took 6 years to become a profitable company. They are a huge startup in the cross-border money transfer sector. So, as you can see, these companies are considered some of the top in the market at what they do, and still it took them 6 years and 5 years to become profitable. And what is the reason for that? The reason for that is basically that it takes time for you to come from a product to a final product to actually selling that product to enough people to generate a revenue. So that's one thing. The other thing is also that as a startup, and especially if you're raising money from VCs and angel investors, you need to grow the company big enough for it to generate enough value to, in the end, being either resell this company or put it into the market, make an initial public offering, sell the shares, and bring a return not only for yourself but also for these other investors. So you have to grow your company, and you have to grow your company fast, and you have to grow your company to a very large and international size. There are very few markets that you can only stay inside these markets. One of them is China, the other one is the US. But in general, what you need to do as a startup is to grow fast, especially in Europe, and grow internationally. And that takes a lot of money. And that's one of the key reasons why these companies take so much time to become profitable. Sterling Bank is a different story. They are UK based, they're focused in UK. But TransferWise had to become global in order to actually achieve what they wanted to do, or at least European. And you as a startup, you're going to start developing a product, you're going to start creating it, and you're going to start selling it. And one example why it takes time for you to become profitable is, let's say that you only have one employee. If you have one customer for that one employee, you are basically trying to cover 100% of the salary with one customer. If you have two customers, then you're trying to cover two customers as employee. But if you have million customers and you still have the one employee, it's a different story. So that's one of the reasons why it takes time for you to actually reach there. And while you're doing that, to get these customers, you have to invest into that. And the other thing that I want to talk about are the pitfalls that a lot of startups do when they are trying to become profitable. So the first issue that I see is that they have their cost not flexible enough, which means that you have a very fixed cost. So you have several employees that you cannot just let them go from one day to the other, or if you have to do it, you have to pay a lot of money to do that. And that's one reason that if you're scaling up and you have this fixed cost, you're going to have some problems when you have very little customers. It's, as I said, one employee. If you have 100 customers or you have one, you have to cover with the money that is coming from these customers. The other pitfall that I see, first, cost not flexible enough. Second one is that usually founders believe that they can make the company profitable much earlier than actually happens. There are a few reasons for that. The first one is that, hey, if you're thinking of the company itself and actually starting making a profit, maybe you do have a nice management of the costs. And if you say, hey, I only need 10 customers to actually make this company profitable, fine, that might be actually even true. But the problem is, if you're raising funds, if you're looking for VCs, if you're looking for angel investors, these guys want you to grow really fast, and they want you to be big because they need the company to have a lot of money to be sold and then bring the investment back to them. So in the end, you're pushed to grow really fast. So maybe if you're just creating the company for yourself and managing the company yourself and keep it as a small company, in 1 or 2 years you might become profitable. But actually, for you to grow in the size that these VCs and these angel investors are going to push you to grow, it's going to take much more time, because you have to invest into advertising, you have to invest into business development and things like that. And the other pitfall that I see a lot of startups have is to be overconfident, in the sense that they believe that they can be profitable in 1 or 2 years and grow to the size that they are profitable, that a VC would like to see. But any venture capitalist that sees that a startup is going to start making a profit on their first or second year of operations, it's just, they don't believe it. It might happen, but it's very difficult for it to happen. As I said, Starling Bank, 5 years. TransferWise, 6 years. It's all about being realistic about this kind of things. And even if you think that being realistic, you're going to be profitable in the first or second year, if you're presenting to a VC, be pessimistic then, because they are not going to believe that that's going to happen. They've been in the market, they've seen what happens, and that's just something that is very rare. So these are the pitfalls, basically. Managing your costs and keeping that flexible. Second one is, it's going to take a long time for you to reach profitability, and your investors are going to want you to grow, so you're going to have to invest a lot into business development, more than maybe you expect. And the third one is, to get funding, you have to be very conservative with your numbers when you show them to VCs. Otherwise, they're not going to believe that you're going to be able to do it. And just one extra thing on top of that is that you have to think about profit as two separate things. So one thing is operational profit, in terms that your operations generate a return, and the other thing is the bottom line, which is the profitable after all the expenses, which is going to include the marketing and advertising expenses. So you have to keep them separate, and you have to make sure that your operational costs becomes positive as soon as possible, while the marketing and business development side is going to need a lot of investment for it to grow, can take longer. So your bottom line can take longer, but if you manage to make the operations profitable, it means that you have a viable product that can go to the market. You're just using the money to develop your market and to grow. I hope you liked it. Please subscribe to my channel down here. And if you have not done so, you can also sign up to my newsletter. Link is down here as well.